Wait, a number of policy decisions this week out from central banks, including the Bank of Japan on Friday. Corporate numbers out from Europe today appear to be dominated by two companies. Ryanair is possibly going to be one of those that's going to move most. So we potentially could well see a drop at the start of the day's trade. The company has lowered its passenger growth forecast, but we've also got numbers out as well today from Philips. And US earnings. It's a busy week ahead this week, mostly tech stocks. Almost all of the big numbers are all sessions on the IG platform, means as traders we can trade them as we see the numbers come through. Let's start off with volatility as we continue to monitor this sideways movement, not really much move on from the back end of last week. But in today's session, I think the short trade seems to be prevailing across the European markets, where you can see here the London markets, which is one of the best areas of the Western economies in terms of the upside that we saw last week. It certainly is the area where there was most upside activity. Today, looks like we got the most downside activity today. In fact, we got the bottom part of the candle well below the entire candle on Friday, indicating a lower start to the trading day ahead. And the 24-hour markets, we're down 0.5%. So looking, as I say, for a lower start on the London session in today's trade. Similar sort of price action, but not quite so dramatic on the German DAX. There was a rise last week overall, but not by anything like the sort of margin we saw here in the London markets. And the pullback today is, as I said, similar sort of move in as much as we got a lower start expected, but not by the same degree of what we have on the London markets. French markets, we can see here on the way down as well. One of the other areas of interest, I think, is going to be is what's going to happen in the Spanish market today. The Spanish Madrid-based IBEX expected down today. You can see the 24-hour markets on the way down. The polls of the election over the weekend inconclusive. I think that's the message that's to be taken. There were some reports over the weekend that, if anything, the government is going to slide right. But it now looks like if that's going to happen, it's going to be a coalition. So watching what's happening on the Spanish count as things there develop. And of course, over the weekend, tragically, a lot more fires causing all sorts of havoc across mainly mainland and in mainland Europe, southern Europe, and especially the Greek islands. So we're going to continue to watch what happens there in terms of the fallout from that as well. Overnight in Asia, a look at what's been happening there on the markets in the session in today's trade, where we have losses across the board. You can see there the Nikkei I say across the board mostly, that is apart from the Nikkei, where we've seen some price action on the Japanese yen, which has favored what's gone on the Japanese markets in the session today with a 1% rise. Hang Seng Stock Index down 1.8%. S&P ASX 200 down, but only by a small margin. Take a look at what happened on Friday on Wall Street before we take a look at the numbers. Gains on the Dow, but only by the slimmest of margins. S&P 500 also on the way up. Nasdaq on the way down, which is where I really want to start with the movements that we've got. The line of support that I was talking about at the back end of last week at 15,285 still very much remains. And this is only a small retracement in what is otherwise a very long-term trend on the way up. In fact, you can see from the lows we had back on the 13th of October to the highs, 52.71%. Now, as I'll explain in just a minute, we got the Fed interest rate decision this week, and that could give a further steer on the markets. But until then, we are really looking at a flat market open. It's been a stunning Wall Street rally across the board. And the Dow recently has gone there to levels not seen since the middle of April 2022. But I think the big test this week will be the Fed. The Dow Industrials moving ever closer, in my mind at least, to the highs I was talking about last week, which is the 35,493, which would be the completion of this projection from the band that we saw established from when it went into there back on the 2nd of June at 33,604. This line of resistance, which was broken with that big candle back on Tuesday last week at 34,500. There is a little bit of money outside of trade at the moment on the way down, but in fact, this remains the price target at 35,493. It'd be interesting to see what happens later on this week with the US markets when the Fed meets. But across Europe today and the US, an insight into how companies are feeling about the outlook. Data for manufacturing and service industries, PMI, across Europe and the US. So that'll be going to be an interesting aspect of the markets. Big week, though, for central banks this week, and a week where there may be little coordinated action. On Wednesday, there's the Fed rate decision, 7 p.m. UK time, while the target rate's expected to rise by 25 basis points. The most interesting thing about this release will be the press conference to see what's behind the decision and to what degree there will be dissent. There's building evidence that the Fed may already have done enough, and is expected that this rate rise may be indicated as the last, at least for the time being. Then, if we look ahead to Thursday, we've got the European Central Bank on its interest rates, 1:15 p.m. UK time. The ECB will announce its decision, while the outcome that's expected is forecast to be the same as for the US, with the refinancing rate up by 25 basis points to 4.25%. There's a fair bet that the ECB will indicate that their job is far from over. And finally, as you can see here, on Friday, the 28th of July, the Bank of Japan interest rate decision. Economists are fairly united that the BOJ rate announcement will be, as it has for the last 5 or 6, 7 years, since it first adopted negative rates back in 2016, to have a short-term interest rate target of a negative 0.1%. Now, that's been the policy to fight chronic deflation that's plagued the Japanese economy for decades, and it'll continue to help jumpstart economic growth. We'll have to see how all that develops, but certainly the Japanese yen is one area of the market where we've seen a lot of movement on the foreign exchange markets. Recent consumer price inflation data was the back end of last week where we saw weakening in the Japanese yen. This is the dollar rising against the yen. And as you can see here, having drawn this Fibonacci on here, it has pretty much hit this line of resistance at 142.09, and it's now on the way down. Uh, Dependent on what happens over the next few days and possibly into Friday, if we see the Bank of Japan do exactly as expected, we could well see a continuation of this weakness. But it'll be interesting to see whether or not we can get a forceful break through this 142.09. We'll have to wait until Friday to see whether or not there's any major move out of that, depending on what the central bankers say on Friday. And of course, outside of that, it's really all about the European Central Bank and the Federal Reserve. And the direction of travel at the moment is for a weaker euro against the US dollar. We got this support line down here at 110, which is the price target in the risk event that we had last week from Warren Venkatas from Daily FX. He was looking at that as a better price to go long on euro dollar at some time in the future. Let's move on and take a look at what's been happening in some of the corporate news headlines this morning. I want to begin with Vodafone. Vodafone quarterly trading statement out today. Quick snapshot of where we are in terms of some of the headlines that we've got there from Vodafone. The group service revenue rising 3.7%. Now, Bloomberg have got estimates there at 2.8%. Broad-based service revenue improvement across almost all European markets, according to the statement out this morning. German service revenue has improved. Now, this was a big negative number. It was down as much as 4% at one point in earlier quarters. This is now down 1.3%. It says supported by broadband price increases. Vodafone Business service revenue growth 4.5%. Vodacom, which is the Africa business, revenue growth there of 9%, which is one of the stronger areas. The company has confirmed its full year guidance. What I want to do is to take a look at what's happening with the share price of Vodafone. Look at the losses that we've seen, the massive value destruction we've seen in Vodafone, I should say, from the 239 level that we saw back in January 2018, 70.91% down. You can see that we're just off there the last couple of weeks or so. The stock will open at 73.3 pence. I can't see necessarily anything here that's particularly worrying. Full year guidance reiterated, and as I said, with many of these numbers showing some growth, there's a potential, I think, possibly for an upside result here. If you are long at 73.3 pence, your stop goes below the 70 pence level, with a view to taking that up in the trading day to day. But we'll have to see how things go, depending on the reaction to the news out this morning. A bit of side interest in this is a report from the tech website ISP Review. It says 5G tracking technology used by Vodafone has revealed that 532,600 people attended the Wimbledon Championships this year. The tracking information you get now through 5G is so granular. Vodafone has been able to come through with this. It says that over 64 terabytes of mobile broadband data were consumed by those across the two-week, two-minute tournament. Now, that's up 36.5% from what was measured in 2022, but the technology then was not as robust as last year as it was this year. This is one of the first rollouts of 5G standalone technology. It just goes to show, as individuals, we've been monitored constantly about what we're doing, where we're doing it, how we're interacting, and the broadband usage is now, the data is now incredibly granular, which includes some interesting numbers. And of course, that's how they can tell that 532,651 people attended Wimbledon this year. Let's move on. Take a look at what's happening in other areas of the market. Discount airline Ryanair has come out with its most recent quarterly report this morning. It posted a 663 million euro after-tax profit for the 3 months ending in June. It also lowered its passenger growth forecast for 2023 because of Boeing delivery delays. It now expects traffic in the year to March 2024 to grow by 9% to around 183.5 million, compared to the 185 million originally expected of those traveling using Ryanair. Now, let's take a look at what's happening with Ryanair stock. It rose on Friday. It's bounced off this rising line of support. You can see here we've got 1, 2, 3, 4, 5, 6 touches on this. So it is an interesting line of rising support. The trading below where we are, the support kicks in at 1627. 1651 is where we open. If you're long on this, your stop goes underneath the underside of this rising line of support. But I'm not so sure that's going to happen. You look at the fundamentals of this report out today, I think there is an underlying weakness in this. So I wouldn't be surprised to get an unwind of some of the gains that we saw on Friday. On the European continent, Philips operating income rising to 221 million euros in the second quarter, up from 11 million this time last year, beating estimates of 149 million. Revenue also beating estimates of 4.5 billion euros. So potentially this is the upside for stock gains today for Philips. It also said that it's produced approximately 99% of the new replacement respiratory devices it needed to provide. In June 2021, the group was forced to recall millions of respirators used to treat sleep apnea. Now, that is good news, and indeed is the news out this morning. Good news. We've seen a 71.8% rise in the stock since the lows back in November last year. And we're looking potentially for gains at the start today. The stock will open at 2081. If you're long on this, your stop goes below the 2,000 level down here, or 20 euro level, with a view there to taking that stop up at the start of today's session. Now, this week is arguably the busiest week in terms of US earnings reports. On Tuesday, the market awaits quarterly earnings from Google owner Alphabet, Microsoft, Visa, General Motors, Verizon, Snap. On Wednesday, tech mostly takes a rest, with old economy stocks, Boeing, Coca-Cola, and AT&T taking center stage. Thursday, we're back to tech with Intel. There's also Ford Motor, Comcast, and McDonald's. And on Friday, oil companies begin reporting, with Chevron and ExxonMobil. Then there's big brand company Procter & Gamble also out, all before the bell on Friday. Almost all these stocks trade all sessions on the IG platform, which means that you can trade these when they release their earnings to the markets. Talking about Chevron, let's take a look at Chevron. It said its second quarter earnings topped Wall Street estimates. Let's take a look at the numbers. The chief executive, Michael Worth, signaled the business remains open to more acquisitions as well, and to increasing shareholder distributions this year. Reuters says in a rare preview of the results from Chevron that coincided with the announcement of the retirement of its chief financial officer, Chevron disclosed a profit line of $5.8 billion net profit in the quarter ended June the 30th. Full results will be disclosed this coming Friday. While that profit is almost half the recorded profit in the same period last year, the $3.08 a share adjusted profit beat the street's estimates at $2.97 a share consensus estimate. As I said, these numbers will be out at the back end of the week. So far as Chevron is concerned, look at the direction of travel. This is a very long dated chart here, going all the way back to pre-century, back to 1998. But let's look at what we've got here. The record high at 187.90 was recorded back on the 14th of November. This line of support at 149.70 was hit recently, the last month or so. The stock will open all sessions on the IG platform this morning at 158.53. I'm fully expecting that to rise today on this good news that we've seen out over the weekend as a pre-announcement from Chevron. Talking about oil, Baker Hughes rig count out on Friday. The total number of active drilling rigs in the States fell by 6 this week, taking the total rig count down to 669. Now, this means that so far this year, Baker Hughes estimates a loss of more than 100 active drilling rigs. This week's count is also 406 fewer than the rig count at the beginning of 2019, prior to the pandemic. In terms of the detail, oil rigs fell by 7 to 530, down by 91 so far this year. Gas rigs down by 2 last week to 131, a total loss of 25 active gas rigs from the start of the year. You can see why. There's a lot less oil in the market. That gives a total of 9 down, but including this calculation, miscellaneous rigs gaining 3, which gives a total drop of that 7 last week. Let me just quickly take a look at what's happening with the price of crude oil. Not too far away from the recent highs, but we're still being capped out by this 200 period moving average on US crude at 76.67. If you get a beat of that, there's then not much stopping it all the way on up to 83.40. Staying on the chart, just wanted to update you on what's happening with the price of spot gold, down for a fourth day at 1960. That's it from me. We're back at 10:30 with Charting the Markets. Hope you can join us then. Before then, the opening of the European markets, to watch out for Ryanair, Vodafone, and Philips.